What if I told you that billionaires don't think saving money is the smartest financial strategy? I know it sounds real, but let us dive into the mindsets of the ultra wealthy and explore why they view saving money differently than the average person. If this resonates, hit subscribe. You don't want to miss what comes next. When you think about saving money, you probably picture a piggy bank or a savings account earning a meager interest rate. It's a familiar image, right? But billionaires, they replaying a whole different game. For them, saving isn't about accumulating wealth. It's about liquidity and opportunity. They recognize that money sitting idle doesn't earn its potential. Instead, they prioritize investing that capital to generate returns. Imagine this, the average savings account in the USS earns about 5 interest. Meanwhile, inflation typically hovers around 3 annual. That means if you're just saving, your purchasing power is eroding. Billionaires understand this. They know that the key to wealth is not just saving, but actively growing their assets. But here's the kicker. Many billionaires grew up in environments that taught them not to save just for the sake of saving. Instead, they learned to use debt and invest intelligently. For instance, one billionaire never focused on saving money as a kid. They were more interested in entrepreneurial ventures, even starting a business at a young age. They understood that investing in opportunities, even if it meant borrowing, could yield far greater returns than hoarding cash. You might be thinking, but isn't it risky to invest everything? And yes, it can be, but billionaires often have a different risk tolerance. They understand that risk is an inherent part of investing, and they embrace it. The wealthy don't fear debt. They use it strategically. They borrow to fund their businesses, acquire real estate, or invest in stocks, expecting that the returns will outweigh the costs. Now let's talk about something important. Billionaires operate with an abundance mindset. They believe there's enough wealth to go around. This contrasts sharply with the scarcity mindset that many people hold, where saving feels like the only way to secure your financial future. The rich see money as a tool, not a goal. It's a means to create more wealth, provide opportunities, and make an impact. Think about it. When was the last time you heard a billionaire say, "I am saving for a rainy day"? Instead, they were more likely to say, "I am investing for my future." One of the most successful investors of all time famously stated, "Do not save what is left after spending, but spend what is left after saving." This highlights the priority of investing over saving. Let us explore another example. Another billionaire didn't accumulate wealth by saving his salary. He reinvested it into his ventures. He took risks, faced failures, and kept pushing forward. His approach exemplifies how billionaires think about money. It's not about hoarding. It's about creating value, but there's more to it. Billionaires also focus on cash flow rather than just net worth. They understand that cash flow provides the means to seize opportunities. A billionaire might have millions locked up in assets, but if they don't have cash flow, they can capitalize on new investments or weather economic downturn. This perspective shifts the focus from merely accumulating wealth to ensuring liquidity for future opportunities. Here as a challenge for you, consider your own financial habits. Are you saving for a specific purpose, or are you just saving because it feels secure? Are you holding on to money when it could be working for you? This kind of reflection can lead to a change in how you view your finances. If that hit differently, smash the like button. It tells the algorithm this matters to you. Let's not forget about the importance of education in this equation. Billionaires often invest heavily in their financial education. They continuously learning about markets, economies, and new technology. This commitment to knowledge allows them to make informed decisions about where to allocate their resources. For instance, consider a billionaire who educated himself about the internet and e-commerce before founding a major company. He took calculated risks, shifted his strategy, and invested in the right technology to create a business that transformed retail. That is the kind of forward thinking that sets billionaires apart now. Let's talk about philanthropy. Interestingly, many billionaires view giving back as a strategic investment. Through their foundation, they invest billions into global health and education initiatives. They understand that improving societal conditions can create a healthier economy overall, which in turn benefits their wealth. They see giving not just as an obligation, but as a smart investment in the future. But here's the truth. Not every billionaire starts with privilege. Many come from humble beginnings, and their approach to saving and investing is often what propels them to success. They don't just save, they learn to create opportunity. They understand that the real wealth lies in their ability to innovate and take calculated risks. Let us pivot for a moment. Have you ever considered the psychological aspect of saving versus investing? The fear of loss can be paralyzing. Many people cling to their savings because it feels safe. This is where the psychology of money comes into play. Billionaires often have a different relationship with money. They see it as a flowing river, not a stagnant pond. They are willing to let it flow out to create more wealth. Now, think about the concept of financial freedom. Most people associate financial freedom with having a large sum of money saved, but billionaires redefine it. For them, financial freedom comes from having the ability to make choices without being constrained by money. This freedom allows them to take risks and pursue passions that can lead to even greater financial success. But wait, let's not ignore the other side. There are risks involved in this approach. A focus on investing can lead to high-stakes decisions that may not always pay off. The reality is that not every investment will yield a return. Billionaires face failures, but they learn from them. They adapt and continue to push forward, which is an important trait for success. So, what's the takeaway here? The billionaire's disdain for saving money isn't key about being reckless. It's about understanding the power of investment and the importance of growth. They encourage us to think differently about money. Instead of saving as a means of security, they challenge us to find ways to make our money work for us. Imagine if you shifted your perspective. What if you viewed your savings as a launchpad for greater opportunities rather than a safety net? What would that change in your financial behavior? Tell me, have you ever felt constrained by your saving habit? What opportunities did you miss because you were too focused on saving instead of investing? This is where the conversation gets real. Many of us have been conditioned to save, but billionaires are showing us that the path to wealth lies in creating opportunities. Now, let's touch on the importance of networking. Billionaires often surround themselves with other successful individuals. They understand the value of connections, which can lead to partnerships, investments, and new ventures. This network effect can be a powerful tool for growth. In conclusion, the real truth about what billionaires think of saving is that they don't see it as a path to wealth. Instead, they view it as a temporary measure. They prioritize investing, learning, and creating opportunities. They challenge us to rethink our relationship with money. As you reflect on your own financial habits, remember that it's not just about saving, it's about investing in your future. So, take a page out of the billionaire playbook. Shift your mindset, embrace opportunities, and make your money work for you. In this game of wealth, it's not about how much you save, it's about how much you can grow. This is the shift that could change everything for you. If you found this perspective enlightening, consider how you can apply these principles to your own life. And remember, the journey to financial success isn't just about the destination. It's about the experiences along the way.